Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown. Good morning, AJ. How are you doing, sir?
I'm doing well, man. How you doing?
I'm doing good. I'm doing good. May 24th, episode 134, summer right around the corner. Memorial Day weekend coming up, the Friday before a big weekend, and somehow scouring the news today to talk about topics. The one that seems to be making all the headlines across the entire ecosphere is NVIDIA. Is NVIDIA leading the market? Are we getting any, is it taking, what are your thoughts on everything that's happening there?
I'm glad that I have a holding in NVIDIA. NVIDIA is doing a 10-for-1 split. That usually means that a company wants to entice its users to be more interested in their symbol. And it creates a lot of hype, right? If you own some NVIDIA, it's now you're going to get 10 times as many shares. That's really enticing.
But is that really what drove it, or was it a combination of that and that they're actually making a ton of money and that there's all these AI plays connected?
Sure.
Because I saw some interesting stats. Like, let me pull this one up real quick. Um, this is basically at 2.6 trillion. Nvidia's market cap is now 899 billion, higher than all the companies in the S&P 500 energy sector. So that was very interesting. And then this NVIDIA post also caught my attention. Oh, wrong button. This one, stock price of NVIDIA since we're about to make the pop here, and look at that. 2018, 2019, 2022, and we just crossed 1,000. Is there more room to the upside? I mean, this company has kind of taken over the entire storyline and maybe leading a lot of the indices.
Yeah. The scoop, and they're bringing a lot of their partners and even competitors along with them. But yeah, AI is a buzzword, and that's you guys got to remember that the markets they are kind of like a psychology experiment, as well as kind of who's got the most flair right now. And so Nvidia's got the flair, and they're in the sector that's got the flair. And Nvidia seems to always position themselves that way, whether it was gaming or whether it was, uh, you know, uh, cryptocurrency mining or now AI. They are in the right place with the right technology. But yeah, what they're doing is they're kind of compounding on the hype. Everybody, it's almost like a dinner time discussion is NVIDIA, right? And so they want to make sure that they can make the everyday investor, a potential investor. So having stock prices up at $1,000 a share isn't going to do that, right? But having it down at $100 a share, it keeps that momentum going. It's just kind of like it's almost like a marketing play, SIP, to do something like that, less than a business play.
And so if we pull up the overall market, I say we start at the S&P. We've been talking about the pullback the past couple
Mhm.
of weeks, coming back to new highs, and it seems as if at least today we're heading right back up there to new highs.
Yeah, we're definitely bouncing off of yesterday's bottom. Let me throw some of my different overlays into my chart here. So we're looking at a 6-month chart for NVIDIA. And I have been mapping some of the highs and low reversals. And for a minute there, we actually had a little bit of a bear trend, at least by our analysis method, which is the retracement analysis method. And then come April 19th, we started a new bull trend, which we've been in ever since. There was a hint that yesterday was going to be a reversal down, but then that has gone away. So let me show you that a little bit better. So I'm going to, what I like to do is use a lagging indicator to determine whether or not we've seen a reversal. And so the one that I really favor is the 3 and 5 day exponential moving average. So if I take a little chart here, and we explained this hack last week, how you can take a MACD indicator and use it to see moving average crossings much easier. If I throw this on there, you can see that we actually crossed as of yesterday's close, the 3 cross below the 5. But as of today, that cross has been reversed. And we call this a 1-day reversal. That usually means that you negate the signal altogether. So unless something happens in the afternoon session and the bears take over again and bring us down to the lows of yesterday, we're still going to be maintaining our stance on being in an uptrend.
And with that, are we looking at anything on the horizon? Because yesterday's earnings, yesterday's or the day before's earnings was kind of the storyline of the week. We did have some home sales, right? So it kind of seems like we're stalling. Things are slowing down as June is right around the corner.
It's so true. I mean, and that's, June, July, August, end of June, July and August are the summer doldrums where things get really boring. But yeah, this week was somewhat boring. I mean, if you take a look, let me switch one more view on my chart here so you guys can maybe see something a little bit differently, because it looks as if we've had some up and down days, but let's just take a look at what it looks like when we see how it closed each day. So if I do a line on close chart, you can see for like the last 6 days, not counting yesterday's dip and today's kind of reversion back, we've been just stalling at the same price, roughly around this 5,300, 5,320, 25, something like that. Right in that little $20 range is where we've been closing. So it marks a moment of indecision going into this long weekend. It looks like we're going to bring ourselves right back up into that level of where we were all week and at the end of last week, and where we'll start after this 3-day holiday. You almost wonder, will people go off to the holiday with these kind of thought processes in their mind and come back on Tuesday with a different sentiment? But right now, it's just a lot of indecision. Little pieces of news are, swaying the market ever so slightly. But for the most part, people are just sitting on their hands. They're neither buying nor selling.
Even though some of the Fed talking heads have said they may need to keep rates higher for longer, right?
I mean, you know what? When you take a look now, we like to look week at week at what's going on with our little Fed Watch tool. And so I was looking, coming up on June 12th, almost 100% confidence that nothing's going to happen. And guess what? Same thing now, July. We thought at one point that July we would see a rate drop. Yeah, it's almost 90% confidence that the rate is going to remain unchanged. So then, even as early as 2 or 3 weeks ago, we were thinking September, but now you'll notice it's swaying ever so slightly. It's almost 50-50, but it's now swaying towards the side of by September, nothing's going to happen with rates. And November, maybe November, we have our first rate drop. And that's pretty much where we expect to end the year. We expect to end the year with just now a 1/4 point rate drop. The Fed keeps saying that, yes, it's great that inflation is moderating, but it isn't moderating enough. And so policy where it is currently just what we want to do. And they keep echoing it almost like a broken record. And they keep selling their bonds. I mean, they're totally doing a great job as far as that quantitative easing tool. They've been doing quantitative tightening. They brought it down from something like $9.5 trillion. It's now at $7.3 trillion. Their goal, their advertised goal was to bring it down to 5 trillion. So they're right on, in the next couple of years, reloading that tool. They may even get it down even further. But with the policy just where it is, they're totally happy because the market isn't slowing down extremely fast. And so they're telling us that the policy is not going to change. And that's what, we got to bank on.
So I imagine that's kind of like what's going to be the flavor of the week. This week it was Nvidia, a little bit of the housing, although it didn't seem to move the market at all, right?
Didn't really tip the markets in either direction. It is something that people are looking at in the long term. Housing prices are keeping people from even buying existing homes. Somewhat moderated. New homes really saw a drop in April, but yeah, not much happening. And then durable goods orders in April. This isn't even the Memorial Day holidays where people are buying washing machines and things like that. But durable goods orders in April kind of went against what the Fed was hoping for. They actually started to increase a little bit. So, the Fed's like, well, if things are going to continue to go at the pace that they're going, we're not going to do anything with our policy. We're just going to keep tightening and tightening.
All right. With that, let's go ahead and talk about some premium selling. And so, as this market continues to make new highs, it's a great time to be a premium seller, right? So, if you have a portfolio and you're not utilizing this amazing strategy that AJ and the crew at Trading Trainer is teaching, evolving, working on a week-to-week basis, we have an awesome weekly workshop that will give you 4 quick hacks, quick tips on how to utilize this for your portfolio and how to get into the mix of some of the things that we're doing here at Trading Trainer. So I'm going to put the link to that in the chat. I did want to talk about the VIX, but I know that that's kind of our topic of the day. So let's go ahead and take a break, and then we can dig into the VIX, because I think it does play into this, the market hitting highs, things kind of calming or not calming, and looking at that as a gauge and as an opportunity. So we're going to take a short break. We'll be back to talk about the VIX. If anybody's watching live now, show some love. Hit that like, hit that follow, hit that subscribe button. And if you have a specific ticker or stock that you want AJ to run through, feel free to throw it in the chat and we'll be sure to run through it. Otherwise, let's go ahead and let me get the screen set up, and we'll take a break, and we'll be right back in a jiffy.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So, AJ, the VIX, this is something we've been talking about a handful of times. And with yesterday's pop or drop, it looks like we did see that correlated with the VIX, but we're kind of right back there at those lows in today's session.
Yeah. So just a review for everybody. This VIX Volatility Index, it's a measurement of investor confidence versus investor fear. And it's correlated based on the demand for options, right? Because investors use options as a way to hedge or, cut off the risk of anything that looks like it's going to get hairy in the next couple of days. So if all of a sudden there's an increase in demand for options, it registers with the demand of options causing option prices to go higher, and that reflects in the VIX, right? The VIX shows when option prices are going higher, when all of a sudden there's an increase in fear. And conversely, the VIX will drop when people think they don't need options, they don't need the protection that they offer, and therefore they're foregoing that kind of insurance. So with that said, I want to, back up a little bit. If I show you a chart of the VIX all the way from when the VIX was put together in the 1980s, you'll notice I've got a neat little linear regression line. That's this white dotted line that we've got here. And that's the mean or average of all time, right? And it's around $19. You'll notice that as the VIX gets lower, it kind of goes, I don't know if I was to draw on the screen, I don't have my markers up, but I'm going to bring my markers up. Takes a second to load, but while we're waiting for it to load, it goes like a certain amount down, and that's where it bottoms out. That's the measure of confidence. When there's confidence, the VIX goes down. And then on the other side of the mean line, that's when the VIX goes fearful, right? That's when people are afraid or scared, right? And you'll notice that it's not equal. The confidence, as investors, as human beings, we only get so confident. But when we get scared, folks, we get really, really scared. And so there's a trade that we can do here that we're going to talk about that actually uh, it actually goes off of that concept that we only get so confident, but when we get afraid, we get really afraid. So if I bring ourselves back to the present in this chart, instead of looking at all time, just looking at the last 3 months, or even a little bit further than that, looking at 6 months, you'll notice that, we've been getting confident and then getting afraid. And so I have a trade that I do every time we kind of get overconfident. So the last time we did this trade was here. I did it here, here. So every time we kind of bottom out on this confidence scale and we're coming to a bottom here, I like to place this trade and I call it a portfolio hedge, right? Because I've got a bunch of trades going on in my portfolio, and even premium selling trades are not inoculated completely from when all of a sudden there's these moments of just unbridled fear that attack the markets, right? So a way to hedge, to make sure that even if those trades somewhat go against you, that you have trades that are going for you, or at least one of these trades, we do this VIX trade. So let me explain it. We create, we do two strategies. We do two vertical spreads. We do a vertical spread that looks like this, with a strike price here and a strike price here. And then we do another vertical spread that looks like this, right? With a strike price here and a strike price here. And so if you could imagine, so long as the VIX stays in this price range, these two vertical spreads are basically going to cancel each other out. And we try to price them. One we would do as a credit spread, so it would give us a credit up front. One we would do as a debit spread, so that it costs us money up front. And we would pick them such that they would cancel each other out. Usually we try to make it so that there's a little bit of extra pennies in there that'll pay our commission for the whole trade, right? So that if the VIX stays between these two strike prices, basically it's a break-even trade. Great. If that happens, the rest of our portfolio is going to be doing well. And we don't really worry too much about the VIX going south, especially if we buy it on these bottoms, because we know that that means that investors are getting more confident. And we have just discussed that investors, humans, only get so confident, but when they get afraid, they really get afraid. So that's where this really pays off. If there is a moment of fear and the VIX shoots up in price, all of a sudden this trade goes from break even to like max profit, like almost 100 to 1, 98 to 1 is what it paid last time. And so what we want to do is we want to think about, since we're at this bottom here, we want to think about two things. Number one, what would signal us to tell us that we are at the bottom and it's time to place this trade? And again, as I mentioned earlier in the show, we're kind of fond of lagging indicators here. You can go and download our free indicators. We've got free access to our web portal where you can have access to these indicators. You can install them into your charting package. And so one of those ones that I like is the moving average crossing. So if you just do this, and this one's really flexible, right? It allows you to use different prices, not just the closing price, in order to calculate, your moving averages. You could pick what kind of moving average it is. It's not just stuck on one type of moving average. You can put a couple of different filters in there if you really want. For this, I would actually take the filters out, and I'd use my 3 and 5 exponential. I'm going to go ahead and show you what that looks like. So you can see that we got a moving average crossing, and today it's already kind of reversing. These would be considered end of day signals, by the way. So if you get an end of day signal, you'll want to have some sort of follow through that you look for the next trading day before you actually place the trade. So that's question number one. What's going to tell you that we're down at the bottom and it's time to place this trade? And number two, what's the structure of the trade? So if we, for instance, take a look at some of these strike prices here, and you want to go, maybe you could use weekly options, but you want to go about 2 or 3 weeks out. So just for laughs and giggles, we'll look at the June 18th option. And, if we do our vertical spreads here, let's see. If we were to do, for instance, a 12, 12 and a half, we could see that thing probably costs us about 30 cents. And so we just come over here onto the credit side and we look for one as well. There's one here. Let's see. There's all kinds of things that you can play around with. And so again, you can go through some iterations. The lower we can get that fear one and still have it compensate that one, I would say do like an 11.12 or 11.50.12. Whatever you can do here to get that to break even or give you a little bit of credit, that's the options that you would want to choose. So again, I usually do a credit spread down on the bottom and then a debit spread at the top, and just make sure that the credit spread is a penny or two heavier than the debit spread. You're going to have a trade that's just either going to do nothing or it's going to pay back, loads if there's a fearful moment over the next 2 or 3 weeks. And as you can see, last time that happened for us. Go ahead, Sip.
Yeah,
Sorry.
I was just gonna say that's kind of the window that you have potential on, right? Is 2 to 3 weeks, and
Mhm.
I believe we were fairly surprised that you got that move in that short of a time frame.
Yeah, the last time we did it, it was a 13.12, and we found that the one that compensated it pretty well was the 16.17. And so we had those two vertical spreads, the 12.13 and the 16.17. And I think that they came out with, if it stayed between that 16 and that 13 range, I would have walked away with like 3 pennies per share, which was perfect for offsetting the commission cost of this whole trade. But as you can see here, we flew up across that 17 range easily. And when I liquidated my positions, I got the full payout, and it was quite exciting, right? Because it was like I invested about 12-15% of my portfolio into this hedging trade. And so when 12 or 15 of your percent of your portfolio pays back that high, and I didn't even, my other trades did very well. So it wasn't actually like this trade had to offset any losses. This trade just blew my portfolio. I mean, I had a happy April.
And I'm just so surprised at how high the market keeps going and how high, quote unquote, the optimism is. but we're getting like spotty data from like
Yeah.
different places that I guess people just don't care about. Like bankruptcies are up, defaults are up, credit
Yeah.
card stuff like that is up, and it's
Well,
like,
and that's why this trade is so important, because people put their rose-colored glasses on, and again, this is just a study in human nature. They put their rose-colored glasses on, and they keep pursuing with the day-to-day, even if there's bad news, even if there's forecasts of thunder showers, and especially since the forecasts for thunder showers, and I'm one of those people who have been forecasting it. It's been a year now, and the thunder showers haven't come. So now, just like we lose credibility in our weathermen when they tell us it's going to rain and instead it's sunny, right? Um, People lose credibility and they just keep buying. But as soon as bad news, as soon as the thunderstorm is here, people aren't as lackadaisical to go for cover. They go for cover pretty damn quick. They buy their options, they start selling off. I mean, it becomes kind of a shit show. So that's when this trade, defies gravity and pays back big time. So I always recommend, and you and I like to point out the times at which this is, getting ready to be a good trade. I hope next week we'll be coming back and saying, here's the trade we placed, and telling people what we did. And I hope people come back and say the same thing to us. Hey, I watched and it looked like, when we got back from Memorial Day, that bottom hit us. So we placed this double vertical spread trade that you talked about.
yeah, I was thinking the same thing. I was like, we literally just had the same conversation like a month ago,
Yeah.
and the what is it? The bull, what is this saying? The bear jumps out the window and the bull
Yeah.
does what?
The bull climbs up the stairs and the bear jumps out the window.
Yeah, and I just can't imagine the bear not wanting to jump out the window sometime soon. And it could be, a Fed statement, it could be a piece of data, like it could be something that really is out there. Because personally, I feel like the inflation story is being kind of, covered up. Well, like inflation is still pretty high, like across the board, like in everyday things. And then when we get the data and it doesn't look as high, I feel like that's not reality. So I love this trade, I love the setup. Let's mark the date, March May 24th, and then we'll come back mid-June, late June, and see what the drama is. All right, so
Yep.
that's AJ's VIX trade right there. Moving on to what you have on your radar and what you have the community's radar, because I know every Thursday you have your meetup with all the members and you go over
Yep.
some trades. And so
Yep.
for today, your pick of the week is one of the OGs, AT&T, ticker symbol T. I mean, this has got to be as boring as it gets.
And that's so, folks, we've been talking about NVIDIA, we've been talking about the VIX, we've been talking about, some of these high flyers. But when we sell premium, premium is in that family of option strategies where we call them range bound. What that means is we actually do our best when the stock stays in a certain range between two prices, right? And so that goes along with being boring. If a stock was in the news and you had mainstream investors jumping on board left and right, it wouldn't stay range bound, right? So we actually, for some of these investments, look for the most boring stock out there. AT&T really falls into that category. And they do well. They've been doing well for, gosh, hundreds of years, right? They've been some of the original telecommunications out there. So yeah, business as usual. But you notice, if I go back here to like a 1-year chart, AT&T for the last 6 months has kind of been in this range bound, roughly between about $16.25 for a level of support, and $17.75 for a level of resistance. And we're up at that level of resistance right now. And so I am waiting for a signal. And as I mentioned before, I like those end of day signals, mainly because of my lifestyle, right? I like to come in at 10 o'clock at night after my toddler's gone to sleep and I'm not playing, with her. I like to spend as much time with her as I can during the day. But at night, after she's gone to bed, I'll come and sit in front of the charts. I'll examine all of my end of day, indications. Every time I get a trigger end of day, then I'll go ahead and look at it the next day, usually with an automatic trader so that I don't actually have to be there. I'll set everything up at 10 a.m. That night to take care of the next trade, 10 p.m. that night to take care of the next trading session. So that's what I would do here. When I get an end of day signal, I would look to trade it the next day or the subsequent days when I get those follow through signals. In fact, I tried to do that on May 22nd, right? That was on Wednesday. And I came back that evening on May 22nd, and my automatic trader said, you didn't get follow through. I didn't place the trade. So I tried again on the 23rd. And again, that evening, yesterday evening, I came back and it said, hey, we didn't get the follow through. It's not happening. And I tried again today. My automatic trader is looking for the opportunity, looking for our follow through criteria. And I'm guessing that it's going to come back. I'm going to check in tonight after the little one goes to sleep, and it's going to say no trade. And I already see my canceling out signal, end of day signal, which is basically telling me stop looking. Let's let it go a little bit higher. And when you get another magenta arrow, we'll start looking again. But this is this light blue signal is basically going to tell me this evening, you didn't get your trade filled, and we're going to stop looking because it looks like that other signal was a false signal. So great. When we do get that solid signal, right? When we, don't shoot till you see the whites of their eyes. When we actually do see the whites of their eyes, what are we going to do? We're either going to short shares of AT&T. You'll need a margin account if you're going to do any sort of shorting. So you're going to short shares of AT&T, and you're going to do that in lots of 100 so that we could then sell put premium against it in the future. Or you can do if you have a cash account, or if you want to use a little bit of leverage, we could buy a deep in the money put that acts like that shorted stock, only perfectly opposite. So I picked out the AT&T January 2025. So that's the LEAP $22 put. So if we go with the $22 put, that could be an alternative to shorting the stock. And then you'll make money, right? Whether you short the stock or you buy the put, that appreciates as this underlying symbol goes down. And then once this underlying symbol finds a bottom, wherever it may be, whether it matches up with this level of resistance or one of these previous ones, that will be our trigger in order to sell some put premium and buy some protective calls. But we're not going to do that until we get to the bottom of that channel. And that's our trade.
All right. AT&T to
the
short side.
To the short side. And a month and a half ago, I would have said it's the long side. I'm not picking directions here. Basically, I know that AT&T is in a sideways channel, so it just so happens we're at a top. And so to get this premium selling engine going, we're just going to start with an initial covering position to the top side. I'm not picking a bias on AT&T. I'm just trading it sideways.
Yeah, and it's crazy to me that AT&T is only like a $17 stock. Like, you really have some opportunities to use different options, to use different financial tools for such a large stable. I don't know would stable be a decent word to call them as a business, right?
It's stable. So the markets, again, this is just so interesting for especially psychology students out there. It's really a popularity contest, isn't it? Right? Because AT&T is stable. Look at the dividend. They give 27 cents a share For something that costs 17.45, that's a great dividend for anybody who owns the stock. This is a well-run behemoth of a company, and they ain't Nvidia. They're not popular. They're just steady.
Although I think Nvidia did increase their dividend,
Yeah,
which
and
is
they
great.
can. They
Right?
can. They've increased all of it. I think they've also been doing a little bit more stock buyback, which helps with the asset price. They're doing the split. I mean, they're doing everything right when you're, the it kid in school.
I just find it so amazing how I don't know if you've ever heard the story of
The
how
CEO.
when they were at the Denny's and they came up with the plan for Nvidia at a Denny's, and now like w- w- I mean a day's worth of revenue could buy up all the Denny's, right?
Hmm.
So that it's just crazy to me how far technology and just founders can take their vision. Uh,
I really hand it, and I saw a video of him giving a speech at Stanford's. I think it was a commencement speech or a graduation speech, and it was he's quite the leader, and he's been smart and on trend for like 25 years now. With gaming, crypto, now with AI. He's in front of the curve. A very smart man.
Yeah, the world needs this product as we continue to innovate. I don't know how innovative it is over by you, but we have robot delivery carts that run around my neighborhood all day long.
That's
So
cool.
I'm seeing like firsthand, you know, where these chips are going, right? Where these
Yeah.
cars are going, and it's not slowing down anytime soon. So
We had a robot deliver the food to our table at a Denny's just recently. Liza and I were on the road and we stopped at a Denny's, and sure enough, a robot was dropping off our food. It was kind of interesting, neat.
yeah, but these are like on the sidewalk. Like they'll pull up to the
I can't
restaurant,
even
right?
imagine that.
It opens up, they bring the food out, they put it in, and then it navigates to, your
Is it Grubhub? Is it one of the companies like that?
no, it's I don't know, Coco, I think is one of them
Neat.
is called. But what else is interesting is they name the robots. So there's like
Yeah,
a name at the top. So you're like Lewis is on his way to so like it's
that's
starting
cool.
to add personality to these
That's
robots.
cool. If you're
Like
gonna do B2C, that makes sense. That's really cool. Well, here one other talk on robots, and it was so interesting because I was waiting at a crosswalk here in Washington D.C., and a robot came by to fill in a pothole, and it totally came by. It shot a whole bunch of air into this pothole to clean it out. Then it sprayed it with some sort of sticky stuff, and then it filled it. It smoothed it, and there was a lady there who was just angry because the robot was blocking the crosswalk, even though it said walk, and it was like filling in this pothole. And I turned to her. I'm like, do you take a moment away from your anger and just acknowledge what the heck is happening here? This robot is fixing a pothole in front of us. How cool is that? And so she kind of smiled, and then she was like, but I'm late. And so she walked around the robot and almost got hit by a car. But I thought that was cool too. So, hey, man, it's the future and it's right now.
it's this first generation of the Jetsons where it's just like,
Yeah.
hey, but I think that is a great use of AI and technology for something that we as humans appreciate, and that's stable roads. So if we get these bad boys out there filling out potholes for more municipalities, hey, I'm all for that.
And it was
Um,
literally done in 3 minutes. It
that's
literally came in and cleaned out this pothole, filled it up, and it was gone. It was on to the next one. I was like, wow.
I still
But
haven't been in
the
a self-driving car.
Oh, I've been in a self-driving car in Vegas, and I've been in one where it was like a Tesla that the person behind the wheel was like, "I'm not driving, I'm not driving," but then the person behind the wheel had to correct it twice. So interesting.
All right, that's our little tangent on our little tangent on AI. It probably
Yeah.
won't be slowing down anytime soon.
No.
But with that, let's go through our speed round. Let's go through some names that some of our users and members have brought up throughout the week, and get some insight and see if there's a play. Let's go ahead and start with Simon up north in Toronto, Canada, interested in Upstart Holdings, ticker symbol UPST. This is one we've covered a few times on different episodes.
Yeah. Upstart is also an AI company, and they're applying AI to balance out the supply chain. Remember how crazy the supply chain got after the pandemic? And so Upstart, I guess, was born then, although it looks like it's been around longer than that. Let me see how long it's been around. Maybe not that long. Started in 2020, December of 2020. But they're applying AI to, solve some of these supply chain problems so that we don't have those big extremes in the future. Okay. Yeah, so what do we look for? We look for sideways and boring. And that's where this stock has landed since about March, February, something like that. It's been in this sideways channel probably between about $21.75, $21.50 up to a level of about $28. So that's a great swing. It's come off of its top. It looks like it's coming down for a bottom. It hasn't hit its bottom yet. But what do we do when something bottoms in a sideways channel? That's perfect timing for buying the stock. And then you let that stock appreciate. In this case, it would appreciate from $21.75 up to $28. Once it finds a top, sell your call premium, buy some protective puts, and that starts that income engine rolling on this stock. And so that's what I think we're going to do. Since it's right now kind of in the middle, slightly to the downside of the middle, there's some other things you can do here. One thing I would do is I would take the weekend and I would really analyze, right? I would come up with all the different scenarios, especially the worst case scenario of your trade, so that you could determine what the max loss of the trade is and then size your position. So that would translate into your desired, risk appetite for your overall portfolio. So this is the weekend to do some analysis on Upstart. And the other thing is I know there's a lot of folks out there that would still like to put we like to leg into our trades. But there are folks who are like, let me just do the whole covered call. Let me buy the stock and sell the premium all at once, or let me do the diagonal all at once. And so when it's in the middle of the channel, that's a great time to do it. What you're banking on there is probably to get exercised out at whatever a set max profit is. But, looking at Tuesday when we come back from the holiday to place that kind of trade, if you want that instant gratification, that instant dialing in, that would be something you might do too. I'm quite excited about this symbol. So Upstart is one that you should, and we should take a look at the option chain just to make sure that I'm not speaking out of my rear end as far as opportunities. What I'm looking for here is smaller bid-ask spreads. So when we get to the at the money, we're right there for our protective options. Protective options, we go 3 to 6 months out. Yeah, there's plenty of people trading these options. So yeah, I'm very happy about this. I think you're onto something. If you're in it for the long term, just wait for that bottom signal.
Yeah, and it's nice to see that it's got some legs to run up in the it's been up at those levels in the future, has the potential to get up there again. Seems as if it's kind of hit that resistance there a few times. So Great pickup, Simon. We'll keep this one on.
What's nice about our strategy SIP is if it stays range bound, like I said, between like this $21 and $28 range, we get those monthly incomes, right? We get those monthly payouts. But if it does decide to shoot up or even shoot down out of our strategies, our strategies either automatically or semi-automatically adjust, and we can take advantage of those moves outside of the channels. So, if people really want to jump in on how to do these strategies, how to do the legging in, how to do the automatic adjusting, then they ought to sit through that little free webinar of mine.
Yeah, just threw the link up in the scroll bar there at the bottom. So thank you for that, Simon. Let's move on to our second name in our speed round. This is Lynn on the East Coast from Boston, Massachusetts. Interested in Symbotic, ticker symbol
Symbotic.
SYM.
We might need to look that up to see what they're all about. Symbotic. I feel like I've heard of them, and they're also some sort of AI play, but I'm not sure.
Well, I'll tell you what it is. It's an American robotics warehouse automation company based in Wilmington, Massachusetts.
Well, there you go. So, I bet you who knows, they may be one of the people behind all the robotics that are in those Amazon distribution places, the people who pull the products off the shelves and bring them over so that they can be packed up nice to come to you. That's cool. Again, beautiful sideways channel, folks. Lynn from Boston, you picked a good one here. So instead of waiting, let's go look at the option chain, make sure it's healthy. So our protective option, not as healthy as Upstart, but not, so bad. There's about a 40-cent, 50-cent bid-ask spread, but the options are up around the $8, $7 range. So I could live with that. Just know, it's a little bit challenging. Let's look at the ones that we would actually sell. So you always sell a near-term option. The near-term option has a little bit more energy behind it, a little bit more trading happening. So yeah, we can make that work. Great sideways channel, halfway in the middle. So same advice that I gave Simon up in Toronto, I'm going to give you, Lynn. This is the time that you would want to, do your analysis. If you're eager to just lock in the whole trade, this is also a good time to figure out what your reward and risk would be on just placing the whole trade. And if you want to lock that in, go ahead. Otherwise, if we're going to leg in, you want to get a little bit lower before you buy the stock, or you buy the back month put option as a substitute, and then you let it get a little higher, and that's when you sell your calls and buy your protective put options. So yeah, you're in the same place. It's at a good price. Yeah, I would go with that. It's great selection.
Some follow-up to what you mentioned earlier, not Amazon, but leveraging AI to optimize warehouse operations for Walmart and Target. So two big competitive players to Amazon, probably trying to play catch up to a lot of the automation that Amazon has done. So some nice core fundamentals there that are on the rise, specifically with the word AI. Anything AI is hot these days. So
yeah, and look, they're making money. They broke even last time, but this time they reported earnings. So I'm happy.
All right, Lynn, hopefully that was helpful in giving you some more additional information. Moving on to our third and final name in our speed round. Back to the West Coast. This is Troy in Spokane, Washington, interested in Sunrun, ticker symbol RUN.
Oh, it looks like I looked at it back in the day, and it looks like when I looked at it, it was trading at a much higher run. Sunrun, of course, is that solar play. They've dropped a little bit, so they're also in a sideways channel. But the sideways channel, it goes from about $10 to $13.25. We're starting to get a little bit tight. I do like the pricing. This means that it's a little bit lower on the pricing, so it means more people can be involved in the trade. Let's see. I'm going to go to the at the money. Oh, yeah, there's a lot of people trading options, at least the near term option. Let's go out to November or even August, but November. Yeah, there's a lot of people trading options on Sunrun, so you've got no problem there. You could get into the options mix and not have to worry about, a big enough market. There's plenty of people trading those options. So yeah, we're approaching a top, and that's where you would, if you wanted to start that income engine, that's where you would either buy some deep in the money put options, or you could short the stock in lots of 100, and then you wait for it to come back down, and that's when you sell your put premium, buy protective calls, and then you just rinse and repeat, rinse and repeat, rinse and repeat. This brings up a thought in my mind. Sunrun, right, is behind a lot of the solar that's going on here in the States. I just read an article that Germany has so much solar. Europe in general has invested so much in solar because, ever since the, skirmish in the Ukraine and Russia, retaliating against Europe, backing the Ukraine by turning off the gas, everybody and their brother has invested in solar, which has created an issue because in the middle of the day in Germany, I read that they create almost 2 times as much energy than they need at the moment. And so they have this energy deficit, and it really screws up their energy markets because they have this where they can't even sell the energy for as cheap as they. But then at night, they've got that problem with a base load. And I think that's happening all over Europe because of their investment in solar. They have to now do an equal investment in battery storage, I think. But it's just interesting that solar isn't the only answer because it's intermittent, right?
All right. And I was just kind of looking at the I don't know, 5-year chart on there. That they've been as high as 95, and that was just like 3 years ago. So this is this has a lot of potential. I don't know why it was up that high, but it is an industry where it's not going away anytime soon, right?
Right.
All right. So Sunrun, thank you for that, Troy. We'll keep an eye on it. That's maybe we have another one. All right. No names to look at. Looking at the SPX, we're heading back up from yesterday's dip, heading into the weekend. AJ, what are we looking at? What should we be? Are we, would it be wise to say that we should be kind of taking a break over the weekend, coming back next week, and letting the new storyline find its narrative? I think, and I'm just predicting here, I think there may be some drama coming out of the Donald Trump trial, because I know that politics and the presidential race is only a few months away, and I could see there being some drama there. Not sure if it'll affect the market, but that's my guess at what the storyline for next week is going to be.
Yeah. I try to stay out of that fray, but you're right. It's inevitable that some of that stuff may affect the markets just because, it's newsworthy. My plan is to do my homework and make sure that I have trade plans in place. I like to have at least 10 trade plans in place ready to go so that and in those trade plans, Sip, I like to make sure I know exactly what I'm looking for on each one of those symbols that I would potentially want to trade. So this long weekend gives me an extra day to make sure all my trade plans are in place and I'm ready to go the minute I get the signal. And it looks like, again, based on some of the candidates, that my pick of the week, AT&T, we had Upstart, we had Symbotic, and we had Sunrun. They're all kind of, poised but haven't given us the signal. So going back and making sure that all your trade plans are in order is on the radar. But other than that, take a break and don't force any trading. I wouldn't force any trading today, and get your VIX trade ready. Have that planned out.
That's right. And with that, want to give everyone an opportunity to jump into AJ's daily workshop. If you're interested in learning more about these trading strategies, some shortcuts to how to utilize this for your own portfolio, the link to this is in the chat. We've got it down there in the scroll bar. And if you've enjoyed the broadcast, show some love, hit that follow, hit that like, hit that subscribe button. We truly do appreciate it. That's all I got on my end. AJ, any final words?
That's all I got. Have a good weekend, everybody. Enjoy the long Monday off.
All right. We'll be back next week with some more options trading insights. All right, everyone. Have a good one. Take care.
Bye.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh,